Hello and welcome. I am Octavius Black, co-founder of MindGym, and joining you for the first time as Executive Chair, about which I am absolutely thrilled. 18 months ago, I asked the board to look for a CEO successor. I set some tough criteria. They needed to have worked extensively in the talent advisory business for most, if not all, of their career. They needed to have worked in leading product, in leading sales, in leading digital transformation. I wanted someone ideally who'd worked in a larger company and certainly what we wanted to become, but also been CEO of a smaller company and therefore knew what it was like to roll their sleeves up. And someone who'd worked extensively in both our core markets, being the US and also EMEA. However tough this brief was, it was one that the board came to solve in finding a most excellent candidate in Christoffer Ellehuus, who I'm going to be introducing you to very shortly and is going to take you through this presentation. But before he does, I'm going to briefly explain what my role is as Exec Chair. I'm still absolutely full-time with MindGym, and where my time is focused is both as Chair of the Board and the governance and ensuring that we are set up for success overall, but also predominantly out in the market, talking to clients, speaking on platforms, promoting the issues around behavioural science and the impact MindGym can have across all our core areas. So that's how I'm going to be spending my time. But now I want to hand over to Christoffer to talk about what has been a tough year for the whole of the HR services marketplace, and MindGym has been no exception. But we have with Christoffer a new strategy, a fresh direction, and I feel very confident that we will succeed where others may find it slightly harder. Over to Christoffer.
Thank you, Octavius, and thank you, everybody, for dialing in this morning. I am very excited to be part of MindGym now. I have been here about 5 months, and I could not be more thrilled. As Octavius mentioned, the last 25 years I've spent in the HR products, technology, and services space. Most recently at Korn Ferry, where I was heading up most of the digital product space business. I came to Korn Ferry via an acquisition. I was the CEO of a training company called ESI for a number of years that I took through a digital transformation and ultimately sold to Korn Ferry. And before that, I spent a big chunk of my earlier part of my career at a company called CEB, a subscription IP-based organization in and leading the HR talent portion of that business, which was essentially eventually acquired by Gartner. And through there, I had career positions both heading up our EMEA business, leading our product development unit globally, and global sales director for a talent business. So lots of interest in this space. And I came to MindGym because I had seen MindGym in the market as a competitor. I'd even hired people from here who are always some of the best people I've hired in the sales organization. So I've always been intrigued by the fascinating IP and products that I've seen from MindGym, and I'm thrilled to be here. So let me take you into the presentation for today. We will spend some time in 3 areas. We will go through our FY24 performance and financials, and Dom will take you through that. I will then proceed to provide some observations about the HR talent market and how MindGym fits into that. And then I will review our strategy for growth in the short and medium term, leading to outcomes. And there are really 7 things that I think are important to take away from this. Yes, FY24 was a very difficult year for MindGym, very like other providers in this space, in the HR space, has been very challenging across the board from everybody that I know in this space. And if you read the general market outlook, so it's been a difficult year. But we managed and pulled up, and we took out 11 million of cost out of the business. We reset it, and we regained profitability and set for a profitable base heading into this year. From a market perspective, this is a very exciting market. Just the part of the market that MindGym is uniquely positioned to in leadership and interpersonal skills is an $80 billion market opportunity. And in my first 100 days, I have seen that MindGym has significant strengths to position itself in this market, but we also have more work to do around commercializing the business, which leads to two parts of the strategy I'll talk about: a short term that's focused on commercializing the business, a medium term that's focused on creating the right product packaging around our IP, products, and data to scale the business for future growth. And I'm very confident that in the medium term, we will see more than 10% CAGR growth and 15 to 20% EBITDA margins, getting us back to what we have done in the past, and that I definitely think we can do again. So with that overview, let me hand it over to Dom, who will take you through our FY24 performance and financials. Dom, over to you.
Thank you, Christoffer. So I'm going to be taking you through the financials today, but I wanted to kick off by talking a little bit about the market. As both Octavius and Christoffer had said, this has been a challenging year in FY24, and there have been a number of things out in the markets and market dynamics that have made it particularly challenging. The first thing that we've noticed is that there's been increased caution from CHROs and similar this year when they've been thinking about their HR budgets. We've seen companies looking for proof before they make big investments. And that's led to things like a number of pilots, which we've not seen before, or not as many pilots that we've seen before. We've seen delays in some of our projects. And indeed, with the tightness on budgets, we've also seen some cancellations. So a very cautious client base, particularly in some areas. Coupled with that, and there have been macroeconomic headwinds impacting the business in key sectors such as technology in the US, and particularly that impacted the US. But we've also seen the cost of living crisis. Consumer manufacturing companies who are dependent on global supply chains have been very careful with what they've been investing. And of course, that continues. We've got elections in the US and the UK, but the US in particular. So some clear macroeconomic headwinds this year. Another factor has been the increased competition from tech investments, such as talent platforms. This is creating a more crowded market. Budgets are being spread across more things, and they're not going to go anywhere. So that is having an impact on our business. And finally, there has been a reduction in client spend on D&I. So the US in particular had a large portion of its business which was in D&I. And whilst that hasn't gone away, it has fallen, and that had an impact on FY24 as well. When we then look into FY24, you can see the impact of that. So on the left-hand side, you can see the quarterly revenues that we've seen gradually growing over the last few years. And then what you can clearly see is that in Q2, there was a significant drop down, and that hasn't fully offset. And that was off the back of some very strong KPIs in things like pipeline. So it really was marked by the impact it had and the quickness of it. Nevertheless, we took action to right-size the business, as Christoffer has already mentioned, and we took out 11 million of costs. 7 million of that was operating and 4 million of that was CapEx. And about half of those cuts related to technology. So obviously the CapEx spend, but also some of the OpEx spend. And what that does mean is that we can get the skill set in the business right as we start to grow the business again. The rest of those cuts were related to volumes, and that will have a small impact on H1 FY25 pipeline creation, but it means we can recruit more effectively as we rebuild the business. Of course, the key factor there is that returned the business to profitability in the second half. And that's very visible when you start to have a look at the numbers. So at the top there, you can see reduced revenue in FY24, down 18%. Also important to point out was that H2 sales were up 15% on H1. And really two stories there. So EMEA was broadly flat, but the US clearly significantly impacted, down on prior year by 32%, with a number of factors, which includes D&I spend, but also includes the tech factors that we talked about as well. And importantly, you can see that profitability restored in the second half. So after the first half loss, which obviously we talked about the half year, you can see that almost offset by the second half profitability. And that's really very much driven by the operating expenditure savings we've made, but also driven by higher revenue levels as well. You can see there the full year LBT, which includes the 8.9 million exceptional items. And this was talked about at the half year. So the key driver there, the intangible write-off, as we stopped some investments in non-revenue generating intangible assets and focused on those which were revenue generating. And finally, you can see the cash position there. So cash was stable in Q4, so ever so slightly up on 1.2 million. It was 1.4 million. And our 2 million loan facility remains unused. So that improving profitability puts us in a good space, provides us stability as we start to rebuild the business in FY25 with our new strategy. And I'm going to hand over now to Christoffer, who's going to take you through that.
Thank you very much, Dom. And so let me talk a little bit about the market opportunity before we get into the strategy. So the market opportunity is significant for MindGym. So the overall L&D talent management market space is about 320 billion. And I think the relevant portion of that is the one that contains to leadership and interpersonal skills training, which aligns with the products and services that MindGym offer, which is about 80 billion in size. Now, the market is highly fragmented, and I'll talk a little bit about the different providers that I think and sectors that are growing in there and how we position relative to that. But before getting there, I think it's worth highlighting a couple of trends in this market space that I actually think is evolving in a direction that plays very well to MindGym strengths, and those are over on the right-hand side. So first and foremost, during COVID, there was obviously a significant investment and refocus on virtual working, virtual learning, virtual everything. But what's really interesting is, I think, is that while we are seeing Zoom fatigue in the workplace, that also contains to a lot of learning and development that I think people are increasingly, especially in the leadership and soft skills portion, is coming back to more in-person delivery for a much better experience. So there's a projected 25% increase in in-person training across this year. And that plays very well to MindGym's strengths that has a broad global facilitator network to drive more in-person experiences. Secondly, there is a trend around low learner engagement that also came from these significant investments in online learning platforms, which are really geared towards self-paced learning, if you want. So it's up to the individual employee to kind of pace their own learning through online platforms. The problem is the big promise of these platforms is not really translating into the level of engagements that the big corporations who bought them tapped into. So there hasn't really been an uptake. So a big focus when you ask heads of L&D in the latest training industry report is they really struggle with low learner engagement, which again plays really well to proven strength of high engagement from learners engaged in MindGym. Thirdly, there is increased focus on interpersonal skills. So MindGym's area, after many years, obviously having had a big focus on tech skills as organizations build tech-specific skills in their organization, the more tech organizations become actually means that there is increasingly focus on the quintessential human skills in businesses that are showing the biggest shortfalls. So things around adaptability, communication skills, leadership skills is the top 3 skills now in LinkedIn's latest skills survey. And those obviously play very well. Those are MindGym Power Alleys. And fourthly, MindGym launched earlier this year a survey among 200 heads of HR to ask them, what are the pressures for you to provide behavioral changes across your business? And 90% of heads of HR said that they need to build new leadership capabilities. 70% said that they need to change their corporate culture because there's been so significant changes in their strategy, in the technology landscape with AI, and their strategies. So there's a significant change from our buyers to change, which obviously mean demand for our services that we can take advantage of. So I think those 4 trends really align to things that MindGym does very well as we look to the market. So how do we position this broad market? As Dom was mentioning, there was obviously significant disruption, and there continues to be significant disruption in this space, as I have seen it from many different angles over the year. So if you think about the two relevant, I think, areas of kind of market space that's really relevant to us. One is the tech L&D platform space, which I really think I have three elements into it. There's partly the traditional LMS place, so the learning management systems that are turning into more learning experience platforms, companies like 360 Learning, Edcast, etc. There's a coaching platforms that have received significant investments over the year. BetterUp is one of those examples. Coach Hub is another one. And then thirdly, there's a new set of entrants, which are career mobility platforms. Beamer is one of those ones. All of these are online platforms that have received significant investments over COVID and over the last set of years. But again, as I mentioned, their big challenge right now is to fulfill the promise of all the investments that they've made, because they're not seeing the uptake and the learner engagement to drive the renewal rates and to drive the value from the corporations that bought them. So it'll be interesting to see how their renewal rates and uptake will be in the years ahead. And especially when you think relative to MindGym, that can leverage both assets around diagnostics, training capability, and in-person faculty to drive much more learner engagement, I think is really a position where we play very well relative to the tech platforms and are winning deals. Another area are the HR advisory solutions areas, the consulting businesses that I know very well as well. And I think a lot of them have been making investments into more productized services over the years, in addition to their consulting services, hoping the consulting arm picks up the productized services and sell those through that channel. I think I've witnessed that has been the challenging plate. And the services feel very disjointed still today. You either sell consulting or you sell a product or you sell some kind of tech, but it's very hard for my client to get a more integrated experience across that. Again, I think relative to MindGym in this space, when you look at the left-hand side, we're focused on the biggest things that clients are increasingly caring about, leadership and culture. We can leverage our assets around diagnostics, coaching platform with Performa, one-to-many training, facilitator network, and content to piece together solutions that feel relevant and engaging. We have in-person delivery across the globe that we can deliver, and it's easy and cost-effective to scale because we don't create everything from scratch, but we leverage productized components to tailor it for the client. So I think relative to those, for sure, it's a fragmented market. There's a lot of investments pouring into it, but MindGym has a unique opportunity here to really take advantage and engage with what clients are really looking for to help navigate and drive solutions that they care about and that they need to prove results and returns on investments on, because as Dom mentioned, they're increasingly under pressure to do that. So I feel very optimistic about our ability to carve out a really significant space in this market to differentiate ourselves. Now, I think it's not only a question of hoping for the future, but we are proving this day in and day out when we work with clients. Alone across the past year, we received several awards in the market. I have pulled out 3 here to demonstrate some of the amazing work that we do with clients across a broad set of level. We won the 2023 Association for Business Psychology Chair's Choice Awards with the amazing work we're doing with Citi. So we are helping Citi and its 270,000 employees to adapt Citi's new visions and values through behavior change. And we have seen significant results in over 60% of employees adopting these new in weekly behaviors. So actual proven results. We run the Brandon Hall Excellence Awards in the US for best advances in coaching and mentoring with the work that we've done with Burberry on their leadership development program. This is an example where we could take advantage of our new coaching platform, Performa, and we actually displaced an existing coaching platform provider in this case because we could not only leverage our coaching platform, but we had all our other assets that we could bring together to create more of a holistic experience with significant impact, as you can see here, on managers and their direct reports. And then thirdly, just on the basic work that we do every single day, on our workouts, our training and management materials. We won the Best Facilitator Award with KPMG. KPMG, who is our partner as we deliver services and training across the UK government to improve productivity, resilience, and performance. So 3 examples just out of some that ultimately you can have products, you can have technology, you can have features. The real test is, can you bring those to bear and create real return for the buyers and a real engagement experience? And we do that every single day. We just need to scale it further. Now, in my first 100 days, I've had an opportunity, obviously, to spend significant time with clients. I've spent significant time with clients both in the US and our teams there, as well across EMEA. And my key observation is that we have several strengths to build on. We have really, really strong client base. 88% of our sales come from clients who had a positive previous experience. So we have a very loyal customer base. We have a very talented and passionate team. I absolutely love our team since I've get to meet them across the business. We have very market-leading research, products, and diagnostics assets we can build on. And we have a great global facilitator and network. All strengths, I think, for us to build on. However, when you look on the right-hand side, my observations on where we have opportunities really relate to how we go to market. It's often not super clear to our buyers to understand exactly what it is we do, how we sell to them, and it's harder for our teams to actually go to market and sell our products and solutions in a way that's easy to buy and easy to sell. We are somewhat over-reliant on our individual sellers to generate leads. So we have limited digital marketing infrastructure to generate leads, create nurture streams, and engage latent pools of previous clients, of which we have a significant amount who've previously done business with us, then left us, and we have an opportunity to re-dig back into them with a stronger digital marketing capability. We have a somewhat complex commercial organization where there's an opportunity to simplify, to speed up execution and focus. And then a lot of our products are very standalone, right? We deliver individual programs. And I had no doubt in my mind that the future of everything, and I've seen this in my prior experience, is all about taking advantage of partner ecosystems where clients are already delivering learning and development, behavioral change solutions to their employees. How do we embed in those ecosystems to make it easier for our buyers to deploy them and easier for us to scale them? And I think there's a significant opportunity to do that. Now, so what does that mean in terms of our strategy? So let me take you into how I'm thinking about my strategy, given the market dynamics I just took you through and given my observations about the business. So at the highest level, I think the 3-year vision that I'm very excited about is to look and take MindGym for what you see on the left-hand side, which I would call somewhat of an episodical provider of behavior change programs. So we do that very well today. We deliver programs for clients around, as you saw, a culture change or a leadership development program or a performance management program. But often clients will do that program with us for a couple of years, and then the program ends and they leave us. Not because they're dissatisfied, but just because they weren't necessarily aware about all the other stuff that we could do. And so how do we move from this more episodical behavior change provider to what I call a behavioral change partner, an always on relevant strategic partner for whatever behavioral change organizations are trying to do, that can both create visibility with clients that we work across multiple areas, be a platform for which to engage them across multiple topics like leadership, culture, and performance, infuse it by data and diagnostics to continue to give them insights around behavioral change areas, both those that are relevant right now and those that might be relevant in the future, and then have those solutions integrated in partner ecosystem that makes it easier for the client to buy, easier for the users to use insights their organizations, and easier for MindGym to scale. There are 2 phases for that. There's a short-term focus for me right now that I'm already starting to engage in, which is all about commercial execution on the business. And then there's a medium-term focus, which is really around better packaging our IP, our products, and our data around a behavioral change model that makes us a strategic partner for clients over time. I think all of that will lead to increased average spend across our client. As you see at the bottom, I think it'll lead to more sticky client relationships. We'll have larger accounts because they will work with us across multiple areas and challenges over the years. And we will have more license and subscription revenue as we better package our products and become data infused over time. So that's kind of where we're going. That's the vision that I'm so excited and engaged to be driving. Now, let me just spend a little bit time on each of these elements to give you a flavor of where I'm focused. So first and foremost, in the short term, it's all about what I call easy to buy, easy to sell, and easy to renew. And it has 5 pillars to it with a set of what might seem very tactical, but nonetheless very strategic and important areas of focus for the business. Number 1 on the left-hand side is commercial rigor. Comes a lot down to rebuilding the sales organization, get the right sellers in, and make sure that we have higher sales contribution for each of our individual contributors. And we have better global commercial process. So not by teams, not by regions, but one global commercial operating framework around talent, around territory management, account management, all the things that makes sales hum over time. Global service delivery is really about tightening how we service and make sure we capture every single contracted revenue pounds and dollars that we get into the business by tightening client contracts to make sure we don't see revenue slippage, for example, and we deliver our components and we get paid for what we deliver, standardize our processes for how we deliver services and can do it at scale. Thirdly, it's all about marketing-driven leads. I think this is a critical component, but it will take time. It takes time to build a digital marketing capability across the organization where we're focused on the right, organizing the right content, building the right digital infrastructure so we can do things like account-based marketing, build nurture streams, and engage a significant pool of over 1,000 latent clients who bought with us over the last 3-4 years, but then never rebought from us again. How do we re-engage those? Digital marketing will be absolutely critical to be doing that. We've started that, but we will have to spend most of FY25 to build the fundamentals of that as we see that kick in. Fourthly, package solutions. How do we go from hundreds of individual products to something which is much more packaged? How do we go from what I often call individual Lego pieces to more the Lego sets that address critical client challenges around behavioral change? It all starts for me with the IP. It all starts for me by building a behavioral change model so clients understand how we work at the highest level and not just by a topical level, and then building product and package solutions that can be sold as more licensed subscriptions engagements over time. All of that is couched in a commercial-driven culture, I think, a much more globally aligned culture that's less about differences in how we operate across regions, but how we operate as one global MindGym team with more commercial focus and accountability for some of the outcomes that I've seen here. That's absolutely table stakes and critical actions that we're focused on in FY25 as we kind of reset. Now, for the longer term, let me just, in the medium term, explain what might seem a little bit more of as an intellectual exercise, but I think nonetheless absolutely critical for how we position ourselves in the medium term. And that comes all down to MindGym's model for human performance at work, how behavioral change, which is what we do every single day, how does it benefit a client? How does it benefit our relationship? How does it elevate it? So if you think about our current state today on the left-hand side, we have done 20 years of research, amazing research that clients love and treasure every single day. I walk into their offices and I see our white papers on their desks. I know that that has tremendous value, but nonetheless, they read it as a very topical, specific intervention. They read our white paper on DE&I, for example, and they buy a DE&I solution, or they read our white paper on wellness and they do a wellness solution. What we're missing is more what you see on the right-hand side, which is building a behavioral change model where we pull all of those topics together, all of our 20 years of research and data, link it to business outcomes and people outcomes. I call it a Rosetta Stone for MindGym around behavioral change because it pulls everything together. And it has 2 benefits. One, It's much better for a client to have a better understanding of how we help across multiple areas, so we can establish a much more strategic relationship with them at the highest parts of the HR buying circle, or any other functional buyer who's looking to drive significant business strategy change. And it'll have value to them because we're much more now linking our solutions to critical outcomes, people outcomes, and business outcomes, increasingly fueled by data. So you can start a lot of different places. I've seen so many journeys across my career that doubles down on technology, that doubles down on features and functionality. The winning promise in any business that I have seen over time that drives sustained revenue growth is about the core IP, the IP that can't be replicated, where you can link your products and your data assets to, that drive a differentiated message and real value to clients over time. So this is an important element for us to get right in FY25 and as we look at the medium term. So what is that going to look like as we are building kind of the medium term growth basis for the firm? I think there are 5 critical steps to keep in mind. And if you start on the left, I think the vision for our value-driven ecosystem from MindGym is what you see on the left-hand side. It's all anchored in the MindGym model for human performance at work. How behavioral change drive outcomes that clients care about across all the topics, not just one topic, but all the topics you see in the green circle: leadership, performance, culture, business transformation, DE&I. And our products will be packaged around that, whether it's our coaching platform, our facilitator network with our proven workout solutions, our diagnostics and analytics, of which I really want to double down in. And data will infuse this journey for clients and their users over time. So it all starts on the right-hand side by building our model, which we're starting to. Then it starts by linking our diagnostics and data assets to the model so we can start proving value to clients and the users. Then it's about integrating the diagnostics and products into packages so it becomes much more easy to understand clients how to buy them. Then we're increasingly looking to have to digitize those assets so that we ultimately can embed into partner ecosystems, learning management systems, learning experience platforms, other platforms that are out there. We don't want to replace them. We want to leverage them to our own competitive strengths. They have the technology. We have the solutions that drives outcomes that they care about. We want to be relevant where the client finds that we need to add value and need to drive outcomes. I think that's a very strong proposition for us to grow over time. And because we're going to infuse this all with data, in turn, we can replicate and strengthen that model because we can drive more data now to do more primary research, more outbound marketing, and more benchmark and ROI investments for clients. So I'm very excited about that journey, but FY25 is a significant year of rebuilding as we're pivoting towards this new model, which I'm very confident will bring us to a great place and a great platform for growth. So in conclusion, yes, FY24 was a tough year. FY25 is a year of recalibration for the business with the strategy that I just walked through. Implementation of this strategy, like marketing, rebuilding our sales organization, getting our product set up for more scalable sales, will take time to realize across FY25. We still, though, have a very stable base for which to run the business, of course. We took out significant costs, and we fully expect EBITDA profitability and cash generation in FY25 as well. As I mentioned, I see there's a significant opportunity. It's a big $80 billion market, is specifically within our areas, and a lot of the market dynamics I talked about, I think, points to MindGym strengths in the market. The new growth strategy to take advantage of that: number one, short-term FY25, recalibrate, focus on commercial execution, setting the business up in the right way. Medium-term, better get packaged, organized around our products, build data and analytics capability around a behavioral change model to build enduring relationships with client. And I think in the medium term, I'm very comfortable that once we get this base reset, we will absolutely be at a place where we will have growth in excess of 10%. And I fully see that our EBITDA margins will recover again and be somewhere between 15 and 20%. So with those comments in mind, I think that's the end of our prepared remarks. And I think we will now be open for any questions that you have.
And we've got a question from Christoffer Erskine at Liberum.
Just a couple of very quick ones from me. First, regarding the sort of new partner channels that you're looking to execute through, is the plan to white label content, or are you aiming to sort of continue to own the relationship down the channel? And then just on the go-to-market, can we maybe talk a little bit more about sort of methods of capturing and then sort of driving data, actionable insights across your CRM platforms as well?
Hey, Casper, a great question. I think in my experience, having run the partner show, I think there are two avenues to explore as we're moving ahead. There is one element where you are part of a partner ecosystem. It could be as an ISV, for example, it sits inside the vendor where you have a package solution that you can distribute and deliver through the model. That's actually not really a fully white label. It's more a referral model where essentially you engage with the client, with the platform provider, and you have your branded solutions part of that. The ecosystem provider, it could be a Microsoft, could be a Edcast, whoever, will essentially promote those as part of their platform, but you ultimately land the individual sale. So it's more of a referral model. And then I think the other model is more of a direct sales channel model where you collaborate on shared solutions that you bring more to market as jointly. I think in my experience, Casper, what the platform partners often struggle in selling anything that is more than a super simple scalable widget, right? So what MindGym does right now about behavioral change and how we package that, I think there's certain basic packaging we could create that could be white level, but I still expect the majority of them will be a referral model that will increase visibility and expansion into the market, but we will ultimately drive a lot of the sales of those ones. And then I think from a data perspective, obviously, we have a CRM in place right now, and obviously we capture client engagements. What I meant before around the digital marketing capability is, for example, not only capturing data about which clients we have engaged with, but provide with a meaningful way of engaging them in the market. We don't really have that through our marketing infrastructure right now. So often what happens is you would create more nurture streams that would sit around that. So if somebody had spent time with you or they engaged with you in one area, you could quickly both sense how they engage with your prior material, where they might be interested in new material, because you can actually track that kind of usage, and you can use it then to build up, nurture that engagement over time and build leads into new channels. We don't have that aspects today, so we might know who the dormant opportunities are, but we have no meaningful way beyond a seller-to-seller engagement to really capture that significant opportunity that sits out there. And that's exactly what we're trying to build around. Did that answer your question?
Yes, that's very clear. And just one more, if I may, just talking about the always-on model, does the diagnostics platform underpin that? And what sort of insights can that give to companies to actually almost reverse the sale process and get inbound leads instead of purely outbound?
Well, the diagnostic, I think, comes at two levels for MindGym. We now already have a handful of organizational diagnostics. So think of those as diagnostics that provides clients and workforces insights into, for example, wellness is one area, or DE&I could be another area, where they have diversity and inclusion issues across their business, and we can create an engagement model around that will give a client some insights into areas. And for example, I think the vision for a lot of those diagnostics with this model that I mentioned in mind is that we don't just provide them insights into one topical area, but increasingly when we run an organizational diagnostic, they might say, MindGym, can you help me solve this culture issue? But as we run the diagnostic, because it's tied to this bigger model I talked about, we can say, sure, here is your challenges around leadership or culture that you asked for, but here are also other things that we found through the survey that might be issues driving that you hadn't thought about within leadership, within culture, within performance. So the whole point of the diagnostics and the model is we can drive the insights into the client at a deeper analytical level beyond just a specific pain point that they brought to us. I think that's an opportunity to drive cross-sell and stickiness for this over time. Secondly, remember, we have a significant asset that we still have to productize and commercialize in 10x, which is, we've announced before, which is a psychometric tool that does individual leadership and people assessments on development gaps, for example, highly validated. And I think there's an opportunity to leverage that to not just provide organizations insights about their culture leadership, but provide individuals with insights about their own gaps, how to make themselves more productive at work, how to make themselves have more sustainable, feel better at work, how to drive inclusion and things like that. I think there's a significant opportunity for MindGym to play a role within the individual diagnostics, back to the point about engaging the user and not just engaging the buyer. Because once you engage the user, we get higher uptake rate, we get more stickiness, and we get higher renewability of these things over time. So as we are building our diagnostics strategy, for me, it's about driving as much data in across both these organizational diagnostics, our individual diagnostics, wherever we can get the data. As long as it feeds back to the same model, we can always drive more analytics and more insights to clients that deepens the relationship.
And we've got a question from Matthew Davis at WH Ireland. Well done on stabilising the business and repositioning for growth. Is your pricing model evolving in light of the shifting competitive environment and go-to-market strategy? And secondly, what was the absolute change in headcount in full year 24? And can you give us a sense of how or if this will scale through full year 25, mindful of the data or tech-led solutions?
So on pricing, absolutely. I would say we are, as we are rebuilding these assets and thinking about the packages, that'll absolutely be a thing that we're looking into. So we've kicked that off right now to look at what does more license-based subscriptions type pricing models look like. That can embed with the things that we do. So we don't have the final answer to that, but we have some early pilots with clients that we're looking into, and with my own experience, trying to rethink a go-to-market and pricing model as we launch more of these more packaged solutions through FY25. I expect we will have more to share once we get to the end of FY25.
And if I take over the headcount point, so our headcount at the end of FY23 was 373. Our headcount at the end of FY24 was 270. The digital, the CapEx element of that now sits around 16. So that headcount we would envisage this year will actually probably gradually drop a little bit. And there will, of course, be some small investments in that going forward. But we don't envisage major changes in FY25.
We've got a question from Celia Duncan at Metis Asset Management. Please, could you give examples of the digital marketing infrastructure that you want to put in place in the near term, particularly given the financial constraints currently?
Yeah. Some of the investments in the digital marketing, I think, comes in two areas. One is around content management. So we have a significant amount of content that we are not really using for marketing purposes. Maybe here and there we're using elements for PR campaigns and stuff like that, but really building content streams around our core pillar areas as it relates to leadership, as it relates to culture, performance, manager effectiveness, to be used for these nurture streams, as I talked before. So we know that people care about leadership. We can increasingly feed them with relevant insights that is relevant to the problem they're trying to solve and what a MindGym solution actually looks like. So there's a content and organize our content to be more meaningful, engaging with a new prospect that might be looking for something. Then I think there is the technology component of building the technology marketing infrastructure around that. This will be around website investments, for example, so we could do better search engine optimization and build and capture the nurture streams for clients that visits us and touches us. It will allow for account-based marketing, so we cannot really do serious account-based marketing today where we actually track behaviors and buying signals across the thing. So it's the technology infrastructure to allow to both track those kinds of buying signals and behaviors, and then the content of top of it to build nurture stream to slowly catch them in the spider web over time. That's the capability we don't have today. It's very sales by sales driven, but it's not scalable. And then I would say thirdly, there's a big element around awareness building. The US is a huge opportunity for us. We've struggled there because of the ups and downs in the market, and it is a challenging market, but I believe it's a significant untapped opportunity for MindGym. We have a really, really strong value proposition relative to the challenges that organizations are looking for. So our ability to really drive awareness, I think the US for us is a big awareness issue. We are a strongly recognized brand in pockets, like in our Upper East Coast side, given our headquarters in New York or our office in New York, but our ability to reach much beyond that, I think, will open a significant opportunity. So those would be the kind of three elements that I think would be around the digital marketing capability. And then in terms of investments in that, we have unlocked, based on the resetting of our cost, most of what we have as discretionary investments around marketing today. And as we progress on FY24 and start to build more running room around our profits and cash, we will continue to invest as much as we can.
And that's the end of questions. Christoffer, do you have any closing remarks?
Thank you, everybody, for dialing in. Hopefully, you are as excited about the medium-term opportunity for MindGym as I am. As I said, FY25, a year of recalibration coming out of an FY24 that was difficult for us. And there continues to obviously be a lot of noise in the market as it resets. But the market opportunity is significant. MindGym has significant strengths to build on. And I think with the strategy that I presented, I'm very excited about our opportunities ahead. So thank you very much, everybody.